The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, this August the 3rd day, Friday. My pleasure to be here. Great 2 hours of programming there. Steve Rhodes kicks us off, and then 9 till 10. I was joined by Daryl Martin, and just a really good show. Now, we're going to look at this in a different way, because yesterday at this time, the market was sharply lower. Interestingly enough, the Dow is now up 210 at 13,088. The S&P is at 1389, up 24, almost 25 points. Comp index is at 56 at 2966. Gold is the GLD is up 94 cents at 155.05. Gold is up over $17 at 16.08. Silver is up at 27.61, up about 61 cents. High grade copper has made a nice little turn, but it's really struggling. It's at 334. And we've got we've got crude oil. Crude oil is up 3.5 at 90.68. And now this is very important. Bonds are down at 149 and 22.30 seconds. So I want to put this picture together, and what I've been doing, and I've been going through this in great detail with my subscribers, my opening calls, daily service, very comprehensive look at the markets. There's tons of charts every day showing you where we are, whether it was in the very short term 120-minute chart or the daily, what to expect intraday, how to use the technical indicators. Let me just quickly go to this because it's so important. I show this every day, the overview and market today. Well, I show 3 things every day regardless. Actually, I should say 4 things regardless. And that is the Dow Daily, and I show the chart patterns. I showed the cup formations where we had started to make slightly higher highs and slightly higher lows, and then suddenly it was the breakout to the doji candle at 13,128. And that was on the 30th of July. I call that a peak F, but with a /C, because what I'd said is, if there was a new high, that new high would be, doesn't have to close it, just has to go to 13,128.65, 1 penny higher, and all of a sudden we'd be looking at a new leg D to the upside, as well as an up channel. And I love to keep it as simple as possible. High lows and high highs means that you're in a bull phase. Lower highs and lower lows, you're in a bear phase. I don't care whether it's a 1-minute chart or a quarterly look at multi-decades. It doesn't matter. So this is also what I show, and I give a very detailed explanation of what we're looking at, what the parameters are, etc. What I also said is yesterday, and this is another chart that I showed, has 5 sectors. One here, the first one on the left is, if you're looking at Tiger TV, now we're going to black charts, black background. Over there, the Dow went to a peak E in the ChapmanWave. Let me just quickly explain what I look at in the ChapmanWave. I want to identify the lowest, most obvious low bar. That's the easy way to do it. And then I merely want to count each successively higher peak. Should take you to at least a peak D. Can even go higher than that, but D is the requisite. That's what you want to have a fulfilled buy mode. If it goes higher than that, great. But the prerequisite, the requirement is for a buy signal to go to a buy mode, you want to go to a peak E. Well, we went to a doji peak E at 12,977, the first one on July the 19th. Pull back in basically 4 troughs to the downside, 5 troughs to 12,521. Started a brand new buy mode in the 120-minute chart to another doji candle at 13,128 on the 30th of July. pull back in 5 troughs. When you use up a lot of troughs to come down, but you don't go down very far, that usually says, hey, be careful, there could be some buying power there. Well, look what happened. Underneath is the volatility index, the 120-minute chart. That made a very small, from 1652 to yesterday's intraday high of 1925, 4 peaks to the upside. Remember the requisite of the ChapmanWave? Failing way below the 21 level that it hit back on the low of the Dow low on the 24th of July. And it turned around. And that, remember I said, let's keep this whole thing simple. If the volatility remains under 20, especially in the teens, 18, 17, 16, 15, that's buying pressure. It's just simple as that. That is buying pressure. Selling pressure is going to hit and sustain when the volatility index goes over 20. So where are we now? We've hit a low today of 1601, and it's at 1637. Huge gap down. The Dow has spiked in the 120-minute chart from the trough of 12,780 to today's high so far of 13,115. Underneath the 13,128, 13 points. Needs 14 points higher to break to a new recovery high. The right side, I've got something I call the ChapmanWave trend gauge. It's really Richard Arm's index. I use it completely different to Richard Arm's as I know it, because I really haven't followed him for years and years and years. Now look at this. Yes, so a question in the den is it's a peak. Remember, peaks on the upside, troughs are on the downside, TROUGH. Those little V-shaped bottoms to make each lower turn around. This is E. I'm calling it E for now. Just it could recycle and turn out to be an A, and it goes B, C, D to the downside. Right now I'm calling it E. And this is new leg A, but a gray A in the Dow 120-minute chart. And even if it breaks to new high, I have to put F in this move. F/, if it's A, I put F/A. If it's B, I call it B. Why? Because it never broke to a lower low. This could still be a continuation of the buy mode. I don't know, and we won't know until later today or Monday by about 12:15, 12:30 in Eastern Time. Now, look at this. On the right here, we've got my trend gauge, ChapmanWave trend gauge. As I say, it's really Richard Arm's short-term trading index. It gave me a signal by pushing high yesterday that within 1 to 2 days, there should be a very sharp upside move. It doesn't tell me how long. It doesn't tell me anything other than if the futures are down and this thing is higher, don't be surprised if there's a sudden very sharp up spike. Well, we've got that. We've got that Dow and S&P, the general market, huge up spike. There's another thing that I'll talk about in a moment. So this trend is saying that there should be a rally, sharp rally, and there is. So it's another success for this particular index that I've developed. No, this is even more important. Look at the channel. Now, there's a technique that I've ever called the ChapmanWave inside track. You see the green line there? If you're looking at Tiger TV, folks, if you aren't looking at Tiger TV, there's so much information that you can glean from all of us as we do our shows. Look at the inside track breakdown. It broke down momentarily to the 12,521 level on the 24th and then closed above the red line, went above the green line. Yesterday it went under it but never broke the red line. That is really positive. And as we're speaking, we are looking at the chance that leg D up in the Dow is a possibility today or maybe by Monday. That'll be F/C, turns into leg D. I don't know if I call it GD because D is the requisite, that's what you want, and then this thing here will become an up arrow, and this one here is already an up arrow in the S&P, because the S&P is already in leg D. It's going towards a very strong resistance zone, and that resistance zone kicks in from about 1399 to the green line, which is 1416. You crack and break and hold over 1416, that's a whole new ball game. But that's the resistance we're looking at. The Dow is still much higher. It's at about 13,290s. So that's it. Every day I discuss this. I show what techniques to use for people who day trade. For day traders, I also use the E-minis. I show the 120-minute chart of the E-minis. I show these beautiful patterns over and over again. They repeat the cup or the arch, left side, right side, price, time match. Look what we're doing here. This is a very sharp move, breaking above all the resistances at 1385, 1387. The high today is already 1389. As we speak, it's at 1387. This is the E-mini futures. I show the 120-minute chart, usually with the 10-minute chart. I just wanted to show this while I'm here. You see this line? I'd been working on this because I like to trade the futures. Sometimes I trade a lot, sometimes I trade a little. It just depends on my activities during the day. But I always draw the charts. I have to do the days. I don't actually take the time to draw it. I'm liable to make a mistake. So the Dow's up 228 right now. The E-minis are up 26. But from the start of this, let me scroll back if you can see it. There we are. The E-minis have just made beautiful ABCD, pullback, ABCD, pullback. AB minus because it restarts and it goes ABCD, pullback. Remember 4 peaks. Learn this technique, the ChapmanWave technique. It can really help you. I'm not saying it takes over everything else you're doing. I'm just saying make it additive to everything you're doing. When you get used to it, it's really going to be a big help. And occasionally it'll be a bother because you'll say, oh, man, I've got the D. What should I do? The market tells you what to do. So here we are once again. So we've had 5 peak Ds up until this moment. No, not this moment. I mean the moment I'm showing, which is at 1:30 this morning at 1:30. Yeah. On the 3rd, and then all of a sudden it goes, spikes above the 200 period X, that's this blue line, the gray mauve line. It goes ABCD to a slight E, pulls back, starts a brand new ABCD. Now look at the trend line that I drew. Isn't that beautiful? It's so simple. It says that above the green line, which it hasn't been able to do even now, above the green line, and you have to consider that it's breaking out. So I've got here a parallel wave count of F, because the MACD is lower, stochastic's lower, /B because it could have made a brand new B. So that's all I have to do. It's going to tell me what else. I'm up against resistance. If I was long, I'm not at this particular point, but if I was long, I'd say, hey, make your stop underneath this bar. You don't really want to take that out. You can make it 1385. I wouldn't waste my time. I'd say if it takes out this candle right there, the 5-minute candle on the E-mini at 386, I'm gone. That's it. I'll wait for another opportunity. So you can use all these time frames. Here's the 10-minute chart. Look, the peak E, and it stalled for the very first time in quite a while. Here at peak E, and then it went to a leg F. I'm saying that we're getting real close to some kind of a bit of a timeout for a rest with the E-minis hitting 1389 round number. Okay, enough with that. Now what I wanted to show you is this. The 3 bears. I always talk about the 3 bears. What are they? Vixie, Bondi, and Dolly. And I'll take calls at 877-927-6648. I'd love to take your calls. And at the same time, I want to say congratulations to our fantastic gold medalists at the games. They're really doing well. I like that. I'll be right back. Basil Chapman, 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We're back. I said I'd talk about bonds. The TLT, that's the 20-year Lehman T bond fund, shows here on the chart that we made a peak E at 132.21. We didn't. The TLT did. There's also a candle that we're looking at right now, which is the candle of the 27th of July, another technique I developed, which is called the ChapmanWave Roman candle. And what I'd say is to subscribers, we've got to be careful because the wick could be filled in. Well, the low is 126.96, and today's low is 127.03. So, and the technicals are fading. This says that bonds could go down. The USU, there we go. It made a peak E in the contract. This is a September contract, and that too is about to test and probably break 149 and 8/30 seconds. That says to me that based on the weekly chart, and that'll be the weekly chart, let's go to the TLT again, that there could be a sideways move with 123, 122 area probably being hit, and then we can anticipate that the stock market is going to start turning down again. This is just an anticipation. Now let's just go through to what the implications. So there's the three bears. This is Bondi. This is bonds at US.P. And my bond monthly chart is still in. There's an alternate E, but I'm calling it C for now. But the weekly chart says be a little careful. The MACD wasn't as strong as it was before. There's a continuous contract. And the stochastic was way lower this time than it was at peak C. So be careful, because bonds could be pulling down. The volatility index, I've spent a lot of time on this. In fact, I've done years and years of studying this. But I spoke about this just the other day, and I said, be careful, because if on July there's a close in the monthly chart above the 9-period exponential moving average, which was at I think it was at 19.80 at that time, I said, then we've got to be careful. Instead, there was a close below it, and so far this month, look, we've got a huge pullback to a lower low. We've gone down to 1601. That's a mistake. Oh, that's the rectangle there. There's a pullback. So we're back in this blue range, which says in the blue range you can get buying in the stock market. And so that volatility index, I've made it real clear, the parameters to watch. And those are my parameters. I made them up. I'll stick with those, and I'll take the slings and arrows if there are. And then VIX and dollar. And the dollar has gone to a peak D, had a very long wick candle, and is filling that candle, and its leg D in the weekly, and says to me, if we close around here today, or even worse, if it closes underneath the 9-period exponential moving average, then, and that'll be at about 8, oh my goodness, stop doing that. That'll be at about 82.50, it's at 82.63, that'll be the first weekly close underneath the 9 EMA since way back in April the 27th, the week of the 27th. Now it'll say there again, dollar in sideways consolidation as the market churns to the upside, and I'm using that word very selectively. I had a question in the den, and the question was about the peaks and the troughs. How do I know what is a peak and what is a trough? In my CD introducing the ChapmanWave methodology, I'm going to go to our first caller in a moment, there's a 470 slide, or it's like a slide presentation. It's a CD, and it goes through the ChapmanWave methodology. It does everything about except the moving averages. It does discuss the moving averages of the MACD and the slow stochastic, but not the 9 EMA and those moving averages that are added later on. But it's really, I'm very proud of it. It says basically, you look at the bar, I look at the top and the bottom. You can use a candlestick for more information. I'm only interested in the high and the low of the bar. If it makes a higher high than the bar before, it continues the leg up. If it makes a slightly lower high, the entire bar, that top makes a slightly lower high, that's a peak. At the bottom, if it makes a slightly higher low, that's a trough. So I'm going to get, if I get a chance, I'll go through these slides a little later on. And in the meantime, I'm going to our first call, and we've got online David in Clearwater. Hi, David. How are you?
Hello.
Hi, David. How are you doing?
Can you hear me?
I certainly can. Can you hear me?
Yes, you're coming through now.
Great.
Had a question regarding UNG and your round number reversal pattern.
Yes. Okay.
Regarding the way it's been acting and how it came down for the last 2 days and then closed at an even 20 yesterday.
You know, I did not see it there, but I saw it in tons of other stocks. It closed yesterday at round number 20. Now, if it does that, oh, is that the music? That was quick. This section is always so quick. I'm going to talk about the United States Natural Gas Fund. UNG is the symbol. It's trading at $20.12. They're up 12 cents. Made a peak F in the ChapmanWave. I'm going to discuss this as soon as we get back, and then I'll also include how we notate the troughs, the peaks and the troughs. We'll be back with David in Clearwater straight after this break at 877-927-68.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We are back, and we are looking at the UNG chart, and I have David. David, do you have a position on right now?
No. I've been waiting for it to come back to a buy point.
Okay, so let me just go through this very quickly. The low was on the 13th of June at 15.18. We're looking at UNG. It's at $20.14. The low was at 15.18. It went to a leg A on at 17.54 on the 14th. A lower high. That's the entire bar was lower. The next day on the 15th at 17.34, that made A. And this is answer to question from Nancy. If the next leg up takes out that previous left side bar by 1 penny, and I don't care whether it's the New York Stock Exchange at 8,000 something or whatever, 1 penny, it starts leg B up. And what happened was, on the 18th, it went by 1 penny and started up. It went all the way to 18.34, pulled back. That was B. When it broke 18.34 by 1 penny, it started leg C. It did that. It went to peak C on the 27th at 20.04. Pulled back 1 penny above that starts leg D, and it went to 20.62 on the 6th of July. That's when you can expect either the longest pullback in price or time. It doesn't have to be there, but that's where you can expect it. And look what happened. The stochastic was failing at that peak D. MACD was failing. And what did it do? It pulled back, but only for a few sessions and not very much. It went down to a low of 18.56. Then it broke above 2062. So that starts leg, and this could be an alternate wave count. I kept it as leg E because of the way it held the 9-period exponential moving average. And then it went E with a doji on the 24th of July, pulled back, held the 9-period exponential moving average, the white line, spiked up to 22.42 with a doji high on the 31st. I have a particular rule about the dojis. We've been looking at that carefully. And what happened was the next day it closed just underneath the doji low of the 31st, 2161. It closed at 2164, just above it. That 2164 said, okay, be careful, because if you close below it the next day, that's a sign that the trend has changed. And it did. It had a very sharp move yesterday, and it closed at the 20 round number low. Now, I have a very, very simple rule. If that 20, if UNG closes below 20, the price 20, especially if it closes significantly below it, then I've got a left side, right side price time match, which says that on the 15th of August, there's a good chance that the 18.56 to 18.55 level will be reached. And at that point, based on the weekly chart, very hard to tell, but based on the weekly chart, which is still technically very strong, that's where you could see a bounce. Now, could it bounce from here? I think it can bounce. It could even bounce a little bit further. It could go to the 20-period moving average at about 20.42. But my guess is that it could be coming down to retest, and that's the trend. You can see, if you're looking at Tiger TV, you'll see the trend line. The support for Monday would be 1951. Support for Tuesday would be 1938. That's the line that I'm watching. Where would it negate everything that I'm talking about? The 120-minute chart, which gapped up to a peak F top on the 31st at 2242, has 19.38. You see how the lines correspond? The dashed line support. I said 1938 was in 2 days' time. Well, 1938 is also the 200-period exponential moving average support. And from my chart, from my reading of the chart, there's a good chance that 1938 to 1922, somewhere around that area, is going to be pretty critical, because if it breaks that, you're looking at 1856. So how it holds in this 200-period moving average on the short term, I'd even call it the near term, say to Monday afternoon, Tuesday morning, that's going to be very important. If it starts to break above 20.57, that's good action. Now, I think your question is, what would you do? Would I be looking to buy the UNG? I actually had it as a buy a while back, and we missed it by a couple of pennies, and then it just took off. But in the meantime, I would look at this as a potential buy to the upside, but I need to see how it holds. And let me give you a range. How it holds between 20.33 and 19.22 in the next couple of days. That's going to be important. So I hope that helps you. And maybe what we can do is we can look at it again Monday or Wednesday and see how it's doing.
Okay, look at the on June 25th. It had a open high and close lower, and I've noticed, on a lot of charts, that seems to be sort of a pivot point that day or the few days thereafter, and those are the numbers on that date that you are talking about.
Okay, well that's June, back in June. Let me go back to June.
June 25th.
You're exactly right. Yes. Right, yeah. That whole area. Well, that you see, and that is also the low. 1814 is the low of the 28th. So the wick of that candle, that becomes in play the moment it starts to test that trend line that I was talking about, the 1855 area. That's why that area is so critical. But in the meantime, I'm just looking at the MACD and the stochastic being pretty weak. But if price holds up, it means that when the technicals turn around, it doesn't have to go all the way to the bottom. But that's the trend line I'm looking at right now. Hope that helps you.
I don't expect it to go all the way to the bottom, but I was just
it doesn't have to.
And I was curious, you're talking about the whole number.
Yes.
Like the even number, whole number 20. on a significant factor of
Hey, you know what? I'm going to talk about that right now. So thank you very much for calling, and I'm going to talk about these round numbers. So I hope for Nancy that explains, but also in my CD introducing the ChapmanWave methodology, page 7, slide 77 says overview of the basic terms. It explains the bar, the candlestick bar, the peaks, troughs, legs, etc. Most importantly, look, here it is, the bar. It's the entire bar. Doesn't matter where it opens or closes. I look for the entire bar. That's the ChapmanWave methodology. What you get from the inside of the bar, the candles, the techniques that I've developed on candles, that's a completely separate thing. So here again is the picture of the candles, and there's a definition of a peak. A peak consists of one or more bars ascending with higher highs until the first lower high is established. You know, you can see it so visually clearly. When you're listening to the words, my eyes just glaze over. I need to see pictures. And here's a picture. So even if it's 1 penny lower, that next bar makes a peak. So simply put, a peak is formed by a lower high bar. I have to use the term high bar because we are moving to the upside. I'll talk about low bars when we go to the low side. Then there was a question, or I had an email question, and I do want to get to it because it's really important, and that was about Merck. I said I would talk. Hello? Oh, we got more callers. We got Kevin in Sacramento. Hi, Kevin. How are you?
Good, Basil. How are you doing?
I'm doing well, thank you.
I was wondering if you could look at Coinstar for me.
Absolutely. Folks, I have, for anyone looking at the left side is the daily, the middle is the weekly, and the right side is the monthly chart. This is Merck that I've got up just for the moment. I was going to talk about it. It's in leg C in the monthly. It's in leg C in the weekly. It's made a peak C in the daily. I suspect Merck is going to go above 45.17 for leg D, and then we've got to be a little bit careful. That'll extend the weekly chart, and I suspect that Merck will then pull back somewhere to the between 42.50 and then 41.50 area, and then we're going to look for August to see if we may continue leg C to the upside. A lot of support. It's a fantastic looking chart. Now let's get to Kevin's CSTR, which is Coinstar. It's a corporation, Coinstar Inc. Now, in my monthly chart, remember the techniques I've been talking about? There's the ChapmanWave drop bucket pattern. We can go to the CD. I'll type in here. It says view, edit, find, and you just type in drop bucket, which is also a double top formation, and that comes right up, and it shows you there's Disney with a double top. This is back in 2002, double top formation. Well, look how these formations repeat over and over again. Doesn't matter which chart. Coinstar just did exactly the same thing. Now, I have a rule of thumb. When a stock makes the double top, this cup formation, and breaks at least halfway into the middle of that cup, you've got to be careful. Why? Because there's just a really, when I say a good chance, I'm talking about like an 80% chance or even higher of going towards the bottom of the cup. And then there's a whole new set of rules when you get there. So 37.43 would be the target. And I would say if in the next week it gets into this Roman candle wick of the of January of this year, anywhere into the 43, 48 area, and Coinstar right now is at 47.27. Sounds like a long way down, but this stock has a history. When it tanks, it goes down really quickly. And it comes back quite nicely, but it goes down a lot quicker. So now the weekly chart made that double top at a G with a failing stochastic MACD. It looks like it wants to test the 45.25 200 period moving average, which has been a really good springboard for it in other periods. Now let's go to the daily. I'm going to ask you, do you have a position in this?
I do. When it was in the low 60s, what I did is I sold the 42.5 puts and then bought a 55.50 put spread. So it below 42, actually below 41, I'll end up owning the stock. Anywhere between 42.50 and, these are August, 42.50 and 50, I rake in both.
You'll be taking in the premium, and then you will own the stock. You can make a decision independently whether you want what you want to do with the stock, correct?
Correct.
Okay. So I'm going to do this. in the Coinstar, which is trading at 47.27, had a really sharp pullback. Now, this is very similar to CMG, which gapped down, which is Chipotle Mexican Grill, and then continued down. That's a very unusual pattern that we've seen lately. Not only that the doji candle of the 27th of July, where it opened at 51.20, gapping down from the 60 level, and then closing at 51.16, and then closing below it, says that at any point you should be able to get a pretty decent bounce out of this thing. But a bounce is all I would expect based on the monthly and the weekly charts. However, you are looking to see what would be the upside range where you're going to start saying, I must be careful. Is that correct?
Well, both. I don't want it to go up too fast, and I don't want it to go down too fast. I'd love to.
No, it's not. It's not the fast. It's the number of points, right?
Right.
Yeah. Okay. So this is what I would do because of today's action. With the Dow is up 244 points, the S&P is up 28 points, and Coinstar is up 50 cents at 47.31. It is up 1%, but that's only 50 cents. I think you've got exactly the right mentality and the framework to work with. The 120-minute chart, I looked at this 2 days ago, and it hasn't changed. It's the technicals are rallying strongly, and the price is refusing to move. So that's telling me that there's a lot of downside momentum that is still not yet fulfilled, and that the upside opportunities are not even being taken. And I don't have to tell you that in previous times, any upside excuse in Coinstar would move higher, correct?
Correct.
Okay, so now it's got a change of personality. The character is saying, I'm a broken stock. It's saying, I haven't even got my first aid kit ready to be able to take advantage. I can't jump. I've got a little bit of a broken foot or something. That's what it's saying right now. So it also tells me that 51.17 is the 9-period exponential moving average resistance on the daily. That's 4 points higher. But within that context, the doji candle is really important at 53.13 high on the 27th and 48.90. So if it rallies at any point, and the candle, the wick, this is the candle itself is at 51.20. If at any point that 51.17 level is touched, that's where you've got to be a little bit careful, because if it breaks and then closes like 51.80, then it's probably going to try to get into the gap, which would be above 53.13. I say probably because it's really one step at a time. That's why when you said faster, it's not so much speed, it's how it can power. If it does it with speed, I must say that would be important. But if it does it with continuity, in other words, if by the end of the day it suddenly pops up to 47.80, and then on Monday it goes to 49.30, that, in the context of how it's come down, is still not very quick, but it's methodical because it's starting to make higher highs and higher lows per day. Okay, now the downside. At this particular point, the only thing I see is 45.25 as the 200-period exponential moving average support in the weekly, and history says no matter how it's plunged, that line has been extremely strong support. It hasn't even got to the 200-period SMA, which is the simple moving average. I think you're in a great position. I'm going to suggest this. I'm going to say do nothing. You're in a great position for this stock. Let's look at it. If Monday it's still doing nothing, that's fine. But if by Wednesday it's starting to move, let's talk again and look at the new parameters. In other words, if it breaks below 41, 44 or 43, that's fine. But if it starts to move higher, let's look at it again Wednesday, okay?
Sounds good, Basil. Appreciate it.
Thank you very much, Kevin.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
Hi, folks. Wow, there was so much I wanted to talk about today. I want to talk about Germany in relation to Europe and the weight of German funding of so much of Europe. There's a similarity between China and us. I wanted to go, maybe next week I'll have a chance. I wanted to talk about the auto parts sector and Ford and GM. Maybe next week I'll just take a little block of time and we'll talk about it. I want you to talk about the relationship of the three bears, which I'll do right now as we're talking about the euro. Question in the den, if I would look at the euro. So the euro itself right now is at 1.2382. I might be a little bit behind, but what's important is the wick of the candle of yesterday above 1.24042. That's going to be very important, because I need to see the stochastic rally to it's at 60%. That's not good. The stochastic, to be able to support a buy mode, has to get up to the 80%. It's the one missing link right now. So I need to see that. And right now it's out of the down channel, and the left side candle of most importance is going to be, let me just quickly do the weekly charts. I'm not missing. Yeah, the weekly chart needs to close above 1.24. It's being blocked, but let me see where it is. It's at about 1.244. Let's say it's at 1.238 now. It needs to close. Wow, if this afternoon can close above 1.244, that'll be really good. It'll be the first time in months, since April, the week of the 27th, that is closed above the 9-period moving average. Now, I have to put into context what I'm looking at here. What I'm looking at here, so I hope that helps. The euro is looking very strong right now. It's got tremendous support at 1.226, and I've got a target for it just on the short term of about 1.244 to 1.243. That's a 50-period moving average daily and the 9-period weekly. So that's it. Now let me just do this. The remaining moments. Thank you. And Nancy says, Basil, I'm going to have to get your CD. The more I listen to you, the more I'm intrigued by this method. I put up formulas in Excel and use them in my trading. Sometimes I'm spot on, but other times just blow it when I don't recognize an exhaustion point in the stock or better point to enter. Thank you, Professor. Thank you, Nancy. Yes, there's just a lot of information. I'll scan it as I wrap up here. The euro is really important. I think this turnaround in the weekly has some legs to it. I don't mean leg A, B, C. I mean, it has a little bit of duration. Why? Because if bonds, the three bears, if they are pulling back so sharply, look, the TLT is down 2.54. I mean, that is huge. That tells me that and the reason why we did it yesterday, 2 days ago, we went short the SPY via the SDS at 245 after the Fed speak when the Dow went below 12,970, and we got out of the trade today for a 9-cent loss. We actually had a very, very nice gain, but we took a 9-cent loss. Reason being, I'm happy with the shorts. I'm looking at the short side, and I want to get longs. We missed a long on CMG, which we made 90 points to the downside by about $1 today. I wanted it because I wanted to bounce. So there'll still be time. If it pulls back, there's still time. I think it's turning around. It's trying to move to the upside. There are stocks that are looking great. Let me talk about this. I really hate to talk about stocks that we have, especially if we've just initiated it. But it is so important for me to show you my technique. I'll just take that risk. Panera made a round number high of all-time high. No, not an all-time high. A round number 164 high on July the 30th. The all-time high is 165.99. Since then, it's pulled back to the 9-period moving average. It opened today at round number 158. No, round number 157. It's made a round number 158 high. This says to me that it should normally Panera is participating. It's not. So I'll talk more about the round numbers and what they mean, how you can use them, etc. next week. Thank you so much for being here. Stay tuned for Nick O'Donnell and all the fantastic programming at TFNN. My service is the opening call. Check it out, and I'll be back on Monday.